Good morning. We are taking a look here at the Dow Industrials Average of where we had consolidated the bottom. As we have said many times that we were short-term oversold, and rallies happen here when they don't break that key trend line, as we said. Now, we spent several weeks in the reversal coming down as we have. This is the fourth week with a big breakout week back above the 10-week and the 20-week moving average on the Dow. So in the shorter term here, for bull rallies to change from a bear reversal to a 1 week, this is one of the best weekly gains that came at the end of the quarter. And the thing about it is, this is what you want to see, where those bulls are going to come off that sideline and say, hey, everything has changed, everything is good. And it's always going to be reflected that the up week here for this 1 week here, this last 5-day period, is where we look at the amount of movement from the low of that Dow was 1193 when we said we were oversold and we were going to bounce and call it a beginning of a summer rally. Summer rallies had, this is the time of year, and it's a light week. Nonetheless, we're above the 10-week, we're above the 20-week. So, as far as support and resistance goes, we have traveled from 1193 up to the intraday high today of 1245. The ISM economic data came out better than expected. That is going to put where the bull came off that sideline. The bull came off that sideline because they believe the second half of the year is going to be great. Well, this is a weekly reversal. The bulls have stepped back in. It's a bull reversal to the many weeks of contraction, as we said. So now what's going to end up happening with the Dow is after the holiday week, we're going to have to get into the earnings season. We ran up off of these lows pretty quickly, and you can tell that that bull exuberance came back in the tape, where that bull exuberance had lost itself over here from the correction, and everybody had changed. Now that they got the PMI data, they got the ISM data, and they have other data points that have come out better, so now they believe it was just a soft patch with Japan and this and that. What we look for in bear and bull markets is where does that sentiment change? However, though, we will deal with the July earnings. And we have traveled a little bit too far, too fast in the short term. And ultimately, the 10-week moving average is going to be on the Dow. Let's take a look at that. It's going to be 12,356. 12,356 will be the 10-week. The 20-week moving average is going to be, let's take a look. That's going to be 12,299. 12,299 is when we make a big weekly reversal, bull reversal, is that the closing will be above these weekly moving averages, and you need to close 4 weeks above it. 4 weeks above it to say that we're going to break those Dow highs. Nonetheless, it's all very short term. It happened very quickly and it happened very nicely, the way that everyone would like to see, where that bull mentality is going to come back in the market. The bull mentality certainly wasn't in here during this overbought process over here. Stock market funding is very accurate about the short-term reversal, which we have in play, and it came this week, as we said, that equities and stocks and indexes were going to bounce from that long 7-week contraction. We always look for a weekly reversal bar in indexes and or equities to take out all of this last 1, 2, 3, 4 week move down in this consolidation, and we're certainly living up to that expectation on the Dow Jones. Those are going to be the support levels moving forward, and what we're going to do is monitor all key indexes and equities, because as I had said, we did many specials over the last month. Go to Stock Market Funding, look at all of the indexes. You'll say that we were telling you that the reversal would be here, and it would be a summer rally move, and the bull rally would would come back in if they got the right kind of economic data, and that's their belief, and it shows up in the tape.